Corporate scandal can be fatal to a company. Past research shows that in the US, accounting scandal can lead to, on average, a drop of 38% in firm value. The main reason for the drop in market value is that it wipes out a company's market credibility, which is important for companies entering into business contracts. So the loss of market credibility in a firm will destroy a firm's future growth opportunity and thus reduce its market value. Based on our research of 212 Chinese corporate scandals dating from 1997 and 2005, these similar accounting scandals only lead to a drop of 8.8% in firm value. The reason to this unique result is that Chinese firms do not rely on accounting as much in doing business contracts. What's also interesting in our research is that some Chinese corporate scandals are very damaging to firm value. So we separate these scandals into three categories. First is called market scandals, and these are the typical accounting scandals like manipulating sales numbers or earnings numbers. This will hurt the relationship between the company and the outside stakeholders, and the stakeholders will lose trust in the company. The second category is political scandals, and they signal the destruction of firm political ties. For example, firms are caught evading taxes or bribing government officials in order to get listing privilege. The final category is the mixed scandals, which is a combination of market and political scandals. Example will be bribing and later on manipulating accounting numbers to cover up the bribing activities, or managers embezzling state assets from the state-owned enterprise, which will anger the government and also hurt shareholders. The corporate scandals that lead to a large drop in share value are the political scandals. These are scandals that damage and even sever the ties between the company and the government. We find that they lead to, on average, a drop of 30.8% in share value. Even though suppliers, customers, and shareholders are not affected by these scandals, the company will still suffer. A case in point is a company called Little Swan, the third largest washing machine manufacturer in the world. They were caught bribing a provincial government official. The CEO later was sent to jail for 11 years, and their political network is all ruined. Many important business contracts of Chinese companies are not done in the open market. Rather, they are relationship-based contracts that are signed between the company and the government, or between two companies, but enforced by strong political ties. For example, a local SOE can obtain state loan from a local state bank because both belong to or have political ties with the local party boss. Therefore, loss of political networks can be more damaging than loss of market credibility for many Chinese companies. The mixed scandals, our last category of scandals, lead to a drop of 24.5% in share value. Not as bad as our political scandals, but still worse than market scandals. They're not as bad as the political scandals because among these mixed scandals, there are fewer incidents of politicians also caught in the scandals, showing that these firms' political ties are not as seriously affected. Let's take a look at this chart of cumulative returns of the three types of scandals. If you look at the green line, that's the market scandal. You see that the drop in share value is the least. And then if you look at the mixed scandals, which is the blue line, and the relationship scandal, which is the red line, you see that the drop in share value is significantly more than the market scandals. What does it mean to investors? Potential investors should examine the company beyond its accounting performance. And they need to assess company ownership, corporate structure, political environment in which the company operates. And also it's important to know who and how the company is being controlled. And they should pay attention to the conflict of interest that can arise between the shareholders and the management when a company is partially owned or controlled by the state, and that their responsibilities are beyond simply making profits for shareholders. Will China change and rely more on market-based contracting? Yes, as China continues to open up and market pressures will lead to the change. However, we're dealing with changing China's political economy and the fundamental way Chinese firms enforce contracts. So this will take 1 or 2 generations. So in the meantime, Hong Kong, with its rule of law, free flow of information, and high professionalism, Hong Kong will continue to serve the role as the most international capital market in China.